On my last USDA video, you guys had a ton to say, and we're really curious about the USDA construction loan. So today we're going to break down the requirements of that loan type and some potential issues that you might run into if you decide to pursue it for your home build. So let's get right into it. The USDA construction loan is a mortgage guaranteed by the U.S. Department of Agriculture, the USDA, that allows borrowers to finance a home build. So this is part of their guaranteed program. You do not have to go directly through USDA to get their construction loan program. This program is specifically different from the direct and guaranteed program because you're not buying a currently standing home. Instead, you are building a house from the ground up, which is a huge deal and awesome kind of program that they offer. The USDA construction loan is different from your quote unquote typical construction loans because it is a construction to permanent loan program. So there is one set of closing costs as opposed to getting a construction loan for the build and then in turn, when the construction is complete, refinancing into a holding loan that would be for the duration of the time that you have the house, usually something like a 15 or 30-year mortgage. In addition to that, with this USDA construction loan, there is not a required down payment. So you do get that extra perk that the USDA direct and guaranteed loan programs are known for. So this construction loan can be used to cover lot purchase, construction, administrative costs, contingency reserves, inspection fees, builder's risk insurance, landscaping costs, permits, utility and septic, installation, etc. There are a lot of things that are umbrellaed under this construction loan that your money with this loan can go towards covering. So with this, as with any other loan program, of course, there are going to be some requirements that you have to meet. The first being that the property must be in a USDA approved area. So remember, from previous videos, we've talked about that meaning that that area would either need to be outside of the city limits, or you may be able to get approved if your city has less than 35,000 people, because that is still under USDA considered a rural city. In order to use USDA's construction loan, the property also must become your primary residence. So you can't use this to build an investment property, to build some type of farm or working space that you would not occupy as your primary residence. You must also use a USDA approved contractor or builder for your build, and the builder has to include a new construction warranty on their work. Additionally, just like we've talked about with the other USDA programs, your debt to income ratio has to be under 41% in order to qualify. Your income cannot exceed the USDA income limit for your area. Just like I've put in previous videos, I will add some links in the description to this video where you can find out what that income limit is for the area that you would be interested in building a house. So obviously a build has a ton of moving parts. So let's talk about the steps of getting into this program and how it works. The USDA construction loan is a construction to permanent loan. So it does combine a typical construction loan used just to finance the actual build of the house with a 30-year fixed rate USDA loan. So you would at the end be paying on a USDA guaranteed loan for 30 years or until you decide to sell or refinance. When I was doing some research on this loan program, I've kind of outlined what the key steps would be if you decided that this was something that you would want to pursue. So the first step is you want to see if you meet the USDA guaranteed criteria. So up above, I will link a video that I made on the criteria for the USDA guaranteed loan. When I go through that and break it down, if you feel like you qualify for that guaranteed loan, that would be kind of step one, in my opinion, of seeing if you would be a good fit then for this construction loan. The second step would be finding a USDA approved contractor. In my opinion, to be honest, this is going to be the biggest hurdle for you if you decide to go this route. In fact, I have a slide coming up that specifically details what the USDA contractor needs to meet and their requirements as well. So that would be the second step, is go on your search and try to find someone who is already a USDA approved contractor or is willing to become a USDA contractor or builder. The third step is to look for property, and I put on here possibly make an offer. You are going to need to know an address for a property as well as have a USDA approved builder for your application when you submit your application for this loan type. So of course you can reach out to a lender and kind of talk through the process. But the reason I put possibly make an offer is because you might want to kind of tie up a piece of property so that you can give the lender that address as potentially where you would want to buy. Now that might be a little bit tricky, knowing that you can finance the purchase of that lot with this loan and you wouldn't have that money yet and you wouldn't have a pre-approval letter yet. So there are some hoops that you're going to have to jump through here, and it may involve a lot of being upfront with people like your agent, like the seller of a property that you're interested in buying, just being like, hey, here is what I am trying to do. Here are the steps that I have taken so far, but I don't quite have the money yet to buy the property, but here's what I would like to do with it. That's why I kind of put that note here on step 3. Step 4 would be connect with a USDA construction loan lender. Now, there are not, I repeat, there are not many lenders out there that do this USDA construction loan. In fact, when I was talking to lenders that I work with frequently, I could not find a single lender that I know of who does this loan type. It is very, very few. But of course, I have a resource list for you that you will also find in the description of this video of different lenders who do this USDA construction loan and which states they can lend in. So all good news there. Then step 5, if you have made it through all of those steps, would be to prepare your documents and submit your application. I would anticipate that the review process on this would be about 30 to 60 days before you actually would close on that loan. Obviously, you would need to close on the loan before the construction would even start. So this is a little bit of a waiting game and does take a lot of patience. So if you are interested in the USDA construction loan, you may be wondering, what are the loan terms and what is there for me to expect? The first thing is the interest rate will be fixed at closing before the construction begins. With that, the appraised value is going to determine your maximum loan amount. Like we talked about, obviously you cannot go over 41% debt to income ratio. If you don't know how to calculate your debt to income ratio, I will link my debt to income ratio video up above. So you can pause this one, go calculate your debt to income ratio, and then come back. But on top of figuring out what monthly payment can go into your debt to income ratio to still keep you underneath that 41%, your home and your plans for your construction will also be appraised. So an appraiser is going to go out for the bank that gives you the loan. They are going to appraise your plans and say, okay, if this house was built on this piece of land that you are considering, and it is built according to these plans, I believe that the appraised value, the finished value after you're done, is going to be X dollar amount. If they say that that home is, let's say, $300,000 at the end when it is completed, that means that the bank will not give you a penny more than that $300,000 to do the loan. So it is very important that you remember the appraised value determines your maximum loan amount. You cannot get more money than they say the house is going to be worth when it's done. According to the USDA website, I found 2 options for this loan. The first option would be you can pay interest-only payments while the construction is being completed. Then after the construction is completed, you would continue on from that point, making your normal mortgage payments, your principal, interest, tax, and insurance, all in one payments. So interest only on the front end, and then your PITI payments after completion. The second way they could do it would be securitizable, where the full principal, interest, tax, and insurance payments are made. So there's never just an interest payment. You would be making your monthly mortgage payment starting from right after you close onwards. So essentially, that payment in theory would be higher than your interest only option. That is something that you should definitely speak with your lender about, because that means that if you are going for this securitizable loan and pursuing the loan that way, you will be making your full house payment up front while you are not living in the house. And that's just something that needs to be considered. So obviously a lot of you were drawn to this loan type. I received DMs on Instagram, lots and lots of comments because of the perks. Some of them are you can build exactly what you want from the ground up. Obviously, the other USDA loan program that we know only allows you to buy an existing home that's already built. Another thing is you get obviously just that one loan for the land, the construction, and the finished home. This will help you save money in the long run on closing costs because you're not closing several different times throughout the process. Additionally, just like any other USDA loan program, there is no down payment required. You will also have the peace of mind knowing that you won't need to qualify for another loan. Because let's take into consideration, maybe you went and you got a construction loan, just a normal construction loan. You would need to apply for that. You would need to get approved for that. They would take into consideration your credit, your debt to income, your total income, all of that at the time of qualifying for that construction loan, right? If that's not a construction to permanent loan, you then need to be planning in the back of your head, okay, in 6 months, 3 months, a year from now, when that construction is done, I am going to need to get a long-term loan to hold this house for 15 years, for 30 years. At that point, if it is not a construction to permanent loan, you will need to reapply and submit all of your criteria again. This involves another hard credit pull. This involves checking your income, checking your DTI, all of that again. So the peace of mind that comes with this is knowing that you won't have to do that. Once you have applied, you get approved, you've been through underwriting, and you close on the loan, you are good to go. You don't have to do that again. Obviously, there's not a single loan type out there that doesn't come with some form of cons. In my opinion, the cons of this are you will pay mortgage insurance on this loan. There's no way to avoid it. The next one is your loan will have a higher interest rate. This is going to be higher than the USDA guaranteed and direct loan programs, as well as it might be a little bit higher than what a market construction loan would be as well. Additionally, your barn dominium style homes may receive some pushback. This would also be true for people who are looking at building any type of home with an unusual or atypical material. If you're trying to build a home out of containers, or, like the issue that lenders have a lot of times with barn dominiums is that they are metal framed or metal buildings as opposed to wood framed, stick built. So just know that if you're trying to use this for that specific like barn dominium type look, check on the front end that your lender is going to be okay with that, because most are not. Another thing that I want to jump into is, even though there is not a fixed set down payment required with this loan program, and most costs are included, there will be some upfront expenses. Now, let me explain what that means. I'm talking about potentially having to put down earnest money because you are needing to get a contract on the land you're trying to buy. Now, I understand you may not be able to fully close on that land until you get the funds from the loan, but you may need to put down earnest money. So that would be a cost up front, even if maybe it is recouped when you close on the loan. Another thing would be cost of plans. You would need to submit full house plans in your application. So if that is just part of the application process, you don't have the loan money yet. So you would need to front the cost of getting those plans, working with an architect, potentially working with someone like a civil engineer, and getting the land surveyed. All of those things would be upfront costs. Yes, they could be paid back to you through the loan, but you wouldn't get access to any of that money until after closing. And all of those items would be required on the front end for your application. So I would just want you to be aware of that even though there's no down payment or anything that I could find on a set number of reserves that you need to have for this loan program, it would definitely be in your best interest to have a little savings account for that, because you will be responsible for bringing those items for your application. Another con with this is that it is very difficult to find a contractor or builder. So like I mentioned, I'm going to deep dive into the requirements of a USDA contractor. The reason being is because I feel like this is where most of you are getting tripped up in the process, and it can be tricky. So the first thing that you need to know is that the contractor has to have a minimum of a 2-year building experience on single family homes. They're going to want to see that this contractor or builder has built homes that are very similar to the one that you are planning to build. Additionally, they must pass a background check. The third thing is that the builder must carry a minimum of $500,000 in commercial liability insurance. They must have satisfactory credit history. They must have a construction/contractor license. And they must be open to additional inspections and a delayed draw schedule. So as a consumer, or as someone who is looking to build a house, you may not see any of these as potential obstacles, but I can tell you this pretty confidently. Builders and contractors are used to working for themselves. Sure, they enter agreements to serve a client and deliver a product to a client, but ultimately they set their own hours and they are used to working for themselves. So with the USDA requiring that contractors who do work for these loans must pass a background check and are going to have their credit checked as well, that is going to seem a little bit invasive for a lot of builders and contractors. They're not used to doing that. Additionally, I love that this program exists. I think it is a great opportunity for buyers who may not have the savings needed to build what they want to build and build a home in a rural area. However, you also have to understand that it may be difficult to get a builder who is not already a USDA approved builder or contractor to become a USDA contractor, knowing that this is a zero down program. And in order to understand this, you kind of have to put yourself in the shoes of the builder. And I'm not saying that this is right or wrong, but this is oftentimes the attitude. If you are the builder and I come to you and I say, hey, I am using this zero down loan. I have plans. I would love to work with you, but this is my situation. This is all I can do right now. And then someone else comes to you and says, hey, I already own my land outright. I have $50,000 to put down as the start of this construction. I've been pre-approved for a construction loan that I'm going to be paying on. And they have all of this financial security. Which customer are you going to feel a little bit more comfortable with, and which customer are you going to see as a little bit more risky? Ultimately, contractors and builders may look at your situation as a little bit more risky. Is it impossible to find one? No. But I wanted to spend time on this just so that you know that you may run into an obstacle here, and it may be a little bit more tricky to find someone to go through this process with you. So regardless of whether you decide to pursue the USDA construction loan or not, I wanted to give you guys some other options for loans that are going to get you similar products. The first one, obviously, we've talked about it before, is the USDA Direct or USDA Guaranteed. This is another way to buy a house with zero down. Now, just because these direct and guaranteed aren't specifically for new construction doesn't mean you can't buy a brand new home. If a builder builds a brand new home and then sells it when it's completed, you can use the direct or USDA guaranteed to buy that completed home. You just can't build it custom from the ground up. So that is an option. Another option for everyone out there who is current military or a veteran, VA does have a construction to permanent construction loan. Now with that, it is also a zero down loan, and the advantage there is that there is no PMI. So you would avoid that mortgage insurance by going that route as opposed to the USDA construction to permanent loan. Additionally, FHA also has a construction to permanent loan. With that one, you would be subject to a 3.5% down payment and overall in general similar requirements. There are many conventional construction to permanent loans out there as well. With those, typically lenders are wanting to see about a 5% or greater down payment. But obviously with conventional loan programs, there are going to be a lot less hoops to jump through than you would see with your USDA, VA, or FHA loan programs. And then of course, as a final option, you could always go with your construction loan, which is straight just for construction. You're paying interest payments only, and then you could refinance in the end to a holding loan at a lower interest rate for 15 to 30 years. So I know we spent a lot of time talking about this today. It was a little bit of a longer video. Let me know what you guys think of this USDA construction loan in the comments below. Of course, if you have additional questions about that, or if you want me to talk about some of these other options, let me know. I was so happy to make this video for you guys today and respond to some of your Instagram DMs. So remember, you can always reach me over there as well. I'm Nicole Nark, Arkansas real estate broker, with videos to help you find your way home, and I will see you in the next one.